The one drone stock that I did not buy just came crashing down by 62% in a single day. In this video, I'm going to give you the full summary of the EHang report that just basically exposed this company as a complete fraud. Here's the entire summary and breakdown, everything you need to know. Let's go. Okay, so just a quick summary on EHang. They are a drone company. They are based in China and they are focused on autonomous drone flight and passenger flight. All of their drones are focused around either carrying people or carrying some type of equipment, basically without a driver or without a pilot in it, I should say. And the report doesn't look so good. So what happened? Basically, a research firm, a group of probably investors, put out a report detailing how they believe that EHang is deceiving investors. So basically, they put out a paper that says, hey, there's a couple things kind of fishy with this company. And so because of that report, the stock fell 62% today. It wasn't trading great at open, and then I think the report must have gone out around lunch, because in the afternoon, the stock fell off a cliff and it opened today at over $120 and it finished today at below $50, which is just a very scary drop off when you're somebody like me, and I own 3 different companies in the drone space. Luckily, I didn't buy EHang, but I bought Drone Delivery Canada, I bought Egg Eagle, and I bought Dragonfly. All of them are doing exceptionally well, and I am so glad that I didn't buy EHang. Now, the report, we need to talk about this. It was issued by a company called Wolfpack Research. The report is 33 pages long. I just read through the entire thing, so I'm going to summarize it for you here so that you don't have to read through the entire thing, because it's very detailed, and luckily they do show photos of exactly what they're talking about to back it up. And if you want to see the entire report, the report is available for download at this link right here. I will also put this in the description to this video. Now, what does the report say? So these are the factors that I'm going to break down in this video. Number 1, they say that EHang has grossly exaggerated their operations. Number 2, they're saying that they took a pre-IPO investment from a company that then sent false sales contracts in order to boost the numbers. Number 3 is that EHang has only collected on 20% of its reported revenues. Number 4 is that they have lied about their regulatory approvals and where they're actually going to be flying these drones. Number 5 is that they have no real assembly line or factory actually producing their drones and their products. Number 6 is that they are using hobby grade motors and not real industrial products. And number 7 is that 95% of the equity is actually frozen in Chinese court at the moment. So in this video, I'm going to break down all of these and show you why they believe that, starting with their operations. So these guys at Wolfpack Research actually went to the facility and tried to take photos of it. And when they went there, they could see hardly anybody working, hardly any actual advanced machinery, any actual tools. And basically all they could find was some shells, some doors, and a couple of battery packs for the drones. But it did not look like a operating business. It did not look like there was any people in there. It did not look very robust, like you would hope that a drone manufacturing and assembly line would look like. Now, fake contracts, this is the second thing. And so this is really interesting because there's a company called Kunzong, I don't know if that's the right way to say it, appears to be willing participant in EH's stock promotion. According to the same finance manager at Kunzong, Kunzong made an undisclosed $14 million pre-IPO investment in EHang, which leads us to believe that its true motive for signing these shambolic contracts was to benefit its investment, which was worth around $68 million today. So what they're saying here is that a company invested into EHang pre-IPO and then wrote a bunch of sham contracts to boost the sales numbers so that the investment that they had originally made would grow in value. And that clearly that's exactly what has happened, because they invested $14 million and it's now worth $68 million, which, as you can imagine, is probably a conflict of interest, especially if they don't actually bring in that revenue, which we're going to talk about right now. So their claim is that EHang has only collected 20% of the revenue, and this claim is completely true. EHang has reported $18 million in total revenue since 2009 IPO, but during the same period, the company's accounts receivables has increased by over $14 million. And so they're claiming that they bring in $18 million, but it's only going to their accounts receivable. It's not actually coming in as a payment. And so it's totally true that the company has only collected on 20% of their revenue. The rest of it is literally, quite literally, sitting in the accounts receivable on the balance sheet right now. And hopefully, fingers crossed, those are real orders and that they can collect on it. But according to this report, it's not. Now, the next item in the report is stating that EHang lied about their actual approvals. And what they do is they go country by country and they list out the press release, they list out the Chinese press release, and they list out the reality of what the current situation is. And if you read through this, you kind of start to go, okay, some of these press releases were a little bit deceiving and they're not completely truthful, and they kind of skirt the edges of what's actually happening, and it's a little bit concerning. So you have to kind of read through these ones and decide for yourself. But basically, they're completely exaggerating their regulatory approvals in their press releases is what the report is arguing. And so you need to be kind of the decision maker on that, and you can decide. But no assembly line, this is kind of one of the big things that they reported on. And in their photos and in their tours of the facility, not at any point could they see an actual operating assembly line. They went in and actually tried to buy drones, which is kind of funny. They went in and tried to be a customer and actually buy a drone, and they're saying that EHang refused to sell it to them and didn't want to sell any of their drones. And when they went into the factory, they couldn't find any resemblance of some type of assembly line. All they could find is a couple of drones just kind of sitting around with no tools or no kind of building infrastructure for them. So kind of crazy. So I totally believe this one as well. And then hobby grade motors. This is one of their claims, is saying that EHang is using hobby grade motors in their equipment. And what's kind of cool about it is they reference a conversation that they had with an executive that used to work at Uber in the drone department. And that executive passed up on EHang because of this exact reason. And so they kind of validate that. And then this photo right here supposedly is taken from a website from T Motors, a company that makes drone motors. And apparently they had a photo of the EHang drone on their website, which would kind of confirm that, yeah, it's probably using their motors. And so this one kind of makes sense to me as well. I kind of believe the report on this one. And then equity frozen. So this is the last kind of piece, the last kind of nail in the coffin. And this is a big one, because if that equity is frozen and it's used as a collateral on debt or loans or whatever it may be, that's a huge issue for current shareholders and the business as a whole. And so as you can see here, this is basically a screenshot from the report, and it's basically a translation of the legal documents from China. And it says that Guangzhou, or EHang Intelligent Technology Co., number of shares 570,000, and the status is frozen. I'm going to wait for this bar to go away. But basically, they're trying to show you that they have pulled legal documents from China and that a large amount of the shares are currently frozen by the Chinese government, or at least by their debtors. So absolutely crazy here that all 7 of these different kind of points, they're able to back it up. They're able to show at least a little bit of justification. And honestly, if even 1, 2, or 3 of these points is completely true, then that is major reason to be concerned. And I am so glad I don't own any equity in this company right now. I am very happy, and I'm counting my blessings that I bought equity in 3 other drone companies. Now, in summary, the report looks very well done. I've read the entire thing, and these guys put in a lot of effort. They spent a lot of money and a lot of time putting this together, and I think they have done a very good job. I personally will not be buying into EHang. I will be staying away from this company, and I think that the stock could fall lower. This report came out kind of late yesterday, and so as more people read it tonight and tomorrow, I think there's going to be more and more concerns for this company, and I would be pretty worried if I was a shareholder. But if you guys get any value out of this video, then please consider hitting that like and subscribe button. And if you're interested in learning more about the stock market, I have an entire 9-hour course dedicated to teaching you the step-by-step strategy that I use every single day, and it is completely free when you sign up with the link down below in the description. There's also a link there for my Discord chat, so if you're interested in seeing my technical analysis and the stocks that I'm investing in, definitely check that out, and I will see you guys in the next video. Good luck investing, good luck trading, talk to you soon.